with the signature also, because we are not because we are not changing any message here. Message is this thing. Okay, we are not changing this message, so the signature will be same only for the transaction. So what if Bob tries to copy this transaction again and again and get the funds in his account? Okay, but this is wrong, right? This should not happen. So to handle the situation, what is happening here is we are adding a unique identifier to every transaction. So basically, for every transaction that you will add to this ledger, it will have an index number. Okay, index number 0, 1, 2, 3, and 4. For every transaction you make, you will have one index ID 0, 1, 2, 3, 4. Right? Like you have some records in Excel sheet, there's some index number, right? Like this is 0 column, 1 column, second column. Similarly, you will add here something unique identifier here 0, 1, 2, 3, 4. And now you can see here, every message is now changed. Okay, now this is a complete message. So even if Bob tries to replicate this message here, suppose he tries to copy this message here again, Alice space Bob's 100 LC, but now this index ID, right? This index ID will be changed because it will keep on increasing, auto increment value will be there. So next transaction will be 5. So because of change in this message, right? This signature value will be changed completely. This signature value will be changed completely. And when we will verify this transaction, it will give you false. So no one will be able to verify that transaction, and that transaction will be considered as invalid. Okay. So now we have solved this problem also. Anyone, if has any doubt or anything, they can add their questions in the chat box. Now, moving further, so now what we have discussed till now, right? Like the earlier protocol that we looked upon, now that protocol is now updated to this thing. Now, according to this protocol, anyone can add lines to the ledger. Only signed transactions are valid, and there will be no overspending. And I think we have solved all these problems till now. So now, this is our updated protocol. Okay. But still, our current system of ledger is different from how crypto works. Okay, it is still different because our current system is centralized while BTC, Ethereum are decentralized. Why it is centralized? Because we are hosting this ledger on a website, right? On a website, on a web platform. So person who is hosting that website, I think someone has doubt. You can add your questions in the chat box. I will surely handle that issue. All right. So basically, this is our updated protocol. Okay. Anyone can add lines to the ledger. Only signed transactions are valid and no overspending. Okay. But still, our system is not centralized, right? Because our website, right? The person who has hosted that website will have the power. He can anytime close that website. And also, if he wants to, he can update the code there and add more transactions to that website. So he has the control still. Like earlier, our banking system has the control. Now this person who is hosting the website has the control. So to remove this, to make it decentralized, what we will do is like there will be no such website. Okay. And every person on this ledger, on this network, right, who is using this ledger will have a local replica of that on their local systems. Okay, suppose this is my computer and this is my friend's computer. This is some person computer. This is person computer. All these nodes. So all these computers are considered to be as nodes. Okay, nodes. So all these nodes will have a local replica of all their transactions on their local systems, so that they can validate that transaction. So in this way, everyone have a full transparency and everyone will have a control, so that no one will be able to. So suppose, let's say if one tries to update the data over this node, then we have other nodes which are saying that, no, this is not valid, right? So this is how we will make this whole centralized system decentralized, by storing the copy of that transactions everywhere on every node. Now moving further here. Now suppose Bob adds a transaction to his ledger that Bob pays Alice 100 LC. Okay, so now what will happen is, as soon as we add a transaction to this ledger, that transaction will be broadcasted to every node, to every computer. Suppose let's say this is Bob's computer and this is Alice's computer. This is Bob, this is Alice. Suppose he's adding one transaction to his ledger or on his local replica, that transaction will be broadcasted to everyone, to Alice also, to this also, to this also, to every node that are live right now. Okay. So it will be broadcasted to everyone. Now what we'll do is, now there's one more issue, right? There's one more issue. Suppose let's say Alice received this transaction that Bob pays Alice 100 LC. But now Alice, how will Alice basically make sure that everyone is receiving that transaction, that it is being broadcasted to everyone? What if Bob put some mind there and just broadcasted that transaction to only Alice? Okay, like Bob pays Alice 100 LC. And other nodes, right? Other nodes are not aware about that transaction. They do not know that Bob actually paid Alice. So for them, Alice do not have those 100 LC. Alice will still have the previous balance that she has. So how to make it reliable? Like so that all nodes are synchronized. All nodes will have the same data at every point of time. How to make sure that? So for making sure that thing, what is done is there is a miner. Okay, there's a person who is listening to all these transactions. Okay, who is listening to all these transactions that are broadcasted to this pool. So basically there is a pool which contains all the unverified transactions, and there is a miner. Okay, let's consider this person name as a miner. Okay, so there are a lot of transactions here that are broadcasted to the network. What he will do is he will collect all these transactions to this block. Okay, so now instead of making a ledger, he is basically storing all these transactions inside one block, and he will make a block of the transactions that he is getting from this pool of unverified transactions. Okay, he will make a block and store all these transactions here. And now what he will do is, basically first he will have to verify those transactions, that amount was actually there in that user's account or not. And then after verifying those transactions, he will add those transactions inside that block. Now after making that block, right, and this is not a single person, there are a lot of person who are competing for this. Okay, suppose let's say there is M1 miner 1, M2 miner 2, and they all are listening to these transactions and are recording them in one block. Okay, so after, suppose let's say miner 1 and miner 2 collected some transactions, maybe they have picked some common transactions also from this pool. So some transactions are common also, that is possible. So suppose there are two blocks here. This is of miner 1 and this is of miner 2. I think my pen is not visible on this Google Meet, right, Amrit?
Yeah, the pen isn't visible.
Yeah. All right. No issues. So suppose let's say miner 1 is there and miner 2 is there. Okay, they both are basically listening to the transactions in the unverified pool of transactions. Okay, now they have made the block. Okay, they have made the block. Let me use some other software. Okay, let me do that. I think now it might be visible to you, my pen. Amrit, am I right?
Yeah, the pen is visible now.
Yeah. Cool. Sorry guys, I didn't know about that. So, all right. So basically what is happening here now is, This is a miner 1 and this is a miner 2 who is listening to all the transactions in the pool. Okay, now they are basically listening to the transactions and they are making a block. Okay, now this block is of fixed size. It can accommodate only some transactions. And suppose let's say this miner 1 is ready with this block and miner 2 is ready with this block. Okay, so now to make that block visible to everyone, what they will have to do is they will have to find some special number. Okay, they will have to find some special number to get that block to be published on that blockchain. So what they will do is they will have to find some number, some special number, which when added to this block, right? So these transactions plus this special number and some hashing algorithm is applied over that. So hash the content of this block, comma, and this results in and the output of this is basically something which starts with 30 zeros. Okay, these zeros can be variable, but suppose let's say they have to find some such special number on which the hashing algorithm when applied results in the number which has 30 zeros in starting. Okay, so this is very rare to find. So this requires a lot of electricity and computation power to find such special number. So they are basically in race to find the special number, okay, to get their block verified. Okay, suppose let's say this M1 wins. Okay, this M1 wins. He finds the special number before M2. So what it will do is his block, right? His block will be broadcasted to everyone. So every node that has a local replica, right? They will add this block to their blockchain. So let me just clear you this thing in a more better way. So if I move further, so let's say the miner 1 block, right? That is being broadcasted to everyone. Okay. And now each miner will be different. And now each miner block will be different, right? Because they might have chosen some different transactions in a different order, or even if they have chosen some same transactions, then also it's possible they are in different order. So if you just change a bit also of that block, the special number will change immediately. So everyone is finding a special number that is different. Okay. So let's first understand what this block actually consists of. Okay. So this is the algorithm that this is the basic equation, right? They are applying an algorithm called as SHA. Okay. And block content and the output is hash. Now this block content consists of previous block hash. So basically you can consider these blocks as, so now instead of basically having a ledger in a single notepad, right? What we are doing is we are breaking that into small blocks, small chunks. Okay. So now suppose let's say this is my node, right? This is my node. So on this node, instead of having one complete node of transactions, what I'm doing is I'm storing that all the transactions in small blocks. Suppose this is the block, this is the block, this is the block. Suppose there are 1,000 transactions. So 100 are in this block, 100 are in this block, 100 are in this block, and they are connected. So this is how the structure of blockchain is actually formed. Okay. So connected blocks basically form as blockchain. Blockchain is nothing but a data storage. Okay. So every node will store this full blockchain structure. All right. So now this time, this block, right? The miner 1 wins, right? So what he will do is he will put all his content inside this algorithm and he will get one hash. And also this block, right? He must be having the previous block because he also have the local replica of that blockchain. So hash of this block, right? Hash of this block, he will store in the new block, which he is making. So basically this block will consist of previous hash. Okay, previous hash. The new transactions that he has selected from that unverified pool. Okay, all these transactions are there. And when another transaction is there that he will add to this block, that is basically the one that he will get. So basically for verifying these transactions, he get the block reward. Okay, he's rewarded something. So that plus special number that he will find for this block. So this block consists of this much content: previous hash, transactions, one more transaction that I will talk about later on, and the special number. So these transactions consist of transaction taken from pool of unverified transactions plus one new entry. suppose let's say for now, this miner will get 100 ledger coin, okay, ledger coin, LC. So for verifying this block, he will get 10 LC as a reward, okay. So this is how the new coins are actually created here, okay. This is a new transaction record that will be added to this block here, okay, this new transaction record here in this block. So this is the exception here, that only for this record, right, this record will not be signed by anyone, because this is not who is transferring something, this is something new. He's getting these new ledger coins from nowhere just to verify that block, okay, because he is spending so much electricity and computation power. So that's why he will be rewarded through this 10 ledger coins. So one new transaction record will be added to this block, okay, along with those previous transactions that he have taken from. So he will find that special number, and what he will do is he will broadcast that block to everyone. So now let's say these are the nodes, different computer nodes. So this is the minor one. So what he will do is, after finding that special number, he will broadcast that block to everyone. This, to every node he will broadcast that. And then people, suppose I am here, okay, you are here, and you are maintaining a block of chain. And you will see that, okay, my new block has come here. I have to append that to my blockchain. So what I will do is I will check that the previous hash stored here, okay, previous hash stored here, right, in this block matches with the hash of the last block or not, okay. This will also have a hash, right? Hash is the something that we received after adding that special number to that block content and applying that algorithm to that. So we will get the hash of that, and we will store that to every block here, hash. So what we will do is we will match this previous hash with this hash, and if it matches, then we will add a new block to this blockchain. So in this way, our blockchain will be continued, okay. So this is the block reward, okay. And for every transaction that you do here, right, for adding every record, you will pay a gas fee to for that transaction, so that miner will verify that transaction. So basically, miner will get two rewards. One is this thing, block reward, that he will get for sure, and the transaction fee, which is called as gas fee also. So for adding every record to that blockchain, you will have to pay some fees, okay. That is small fees that you will have to pay to this miner. So after verifying this whole block, miner will be getting a cumulative of all the transactions gas fee plus the block reward. Now this is a kind of blockchain structure that you will get here. This is block. Let's see here, the hash of this block is being stored as a previous hash in another block, okay. And in this way, our whole blockchain will continue. I hope you are able to understand this kind of thing. And this is basically called as proof of work, because basically miner is spending so much energy there, his computation power plus electricity and all that stuff is going on. So he's getting the reward for that. So that is called as proof of work basically. So if you have any doubt till now, you can let me know in the comment sections. I'm making another call here. I'm trying to explain in easiest manner as possible that I explain to myself. So just let me know if you are able to understand or not. or I will do it again.
I think Rishabh has a question in the chat box.
All right, let me just check it. Basically, this hash rate, right? This hash rate is something, the computational power that used to verify the transactions, okay? So basically, we are using the proof of work algorithm here, right? Proof of work. So for that, we basically use some computational power, right? So with how much speed we are basically finding that special number to get that 30 zeros number, right? So the time period for that is basically called as hash rate. In how much time we are basically getting that special number, which miners are competing for, right? So that is basically called as hash rate. Let's say for Bitcoin, right? Bitcoin, the hash rate is around 10 minutes because in every 10 minutes, we basically get one new block. So this is the thing. So in every 10 minutes, right, one new block is being broadcasted to everyone on the blockchain network. So this is called as hash rate. Now, suppose let's say after a block gets broadcasted, right? After a block gets broadcasted to everyone. So now suppose let's say there are two miners, right? Earlier, miner one and miner two. Let's say miner one picked some transactions and miner two picked some transactions, and there were some common transactions between those blocks, right? Which miner one and miner two was creating. So there was some clash. What if miner two continues to make that block, continues to find that special number for that block, even after that block got broadcasted? So to handle the situation, what happened to handle the situation, what is happening here is, suppose let's say that miner two continued finding the special number for that block. So here, if I talk about this thing, now suppose let's say the next time when miner 2 was able to find the special number, in this time miner 2 wins, but the block was previous one only. So everyone was storing a blockchain, right? Block of chains, chain of blocks, sorry. So this is my node basically, okay, on which this blockchain is getting stored. Suppose let's say now miner 2 wins and he sends me, and this was a newly broadcasted block that miner 1 broadcasted, right? Now miner 2 broadcasted the new block, and now this block contains the hash of this block as a previous hash, right? Because he didn't change anything of that previous block, of this new block, and continued broadcasting that. But now I will see that this block has the same hash of this block only. So what I will do is, so now two chains will be made here, okay? Two chains will be there, this and this. Two branches are there now. So once the block is broadcasted, right, that is not treated as a truth. What happens is people continue to listen to more blocks, and if they add to this blockchain, then it is accepted. Okay. Suppose let's say now other miners started making block and continued broadcasting those blocks, and now I received blocks further regarding this thing here and this here. Now this chain has more blocks, right? So I get more confirmation for this block that this block is right and not this. So I will cancel this branch and I will consider this branch as truth. So this is how blockchain actually works, okay? So I think that was it for the first phase. And that is all what I have written here, okay? So this is something that how blockchain and Bitcoin actually works. Now you might be having some more questions like what if all Bitcoins are mined? Will it still continue to work? Why new players are there? Like instead of Bitcoin, we have Ethereum, we have Mana, we have BAT, we have XRP, and so lot of coins are there, right? So are they doing something exceptional? Do we actually need those coins if we have already a Bitcoin? What is DeFi? What are smart contracts, NFTs, token, metaverse? So these are some questions that are there that you might be having, but because the session is only for a small period of time, I cannot cover this much. But yeah, I will be totally help you You can ping me anytime on any social media, all right, to clear these doubts, or you can explore this. But now you must be having some basic idea, right, about how blockchain and Bitcoin is actually working. So now you can relate those concepts with these things by searching on internet, by exploring, and then I think you will be able to do it. Now, these are some disadvantages of crypto as well. Okay, like there is no regulation, so that's why it is a highly volatile asset. So that's why its price keep on going up and down. So currently, this price of crypto depends on demand and supply only. Okay, like people if want that crypto coin, then its price will increase, and if its demand is low, then its price will decrease. Okay, and some illegal activities are also performed because it is difficult to trace person like who made that transaction, right? Because he is exposing only his address, not his real identity. So that's why illegal activities are also being performed on these blockchain ledgers. Also, those who have a large quantity of crypto runs the market. Okay, these are called as whales. And maybe like in India, they are not directly exchanged with fiat currencies. Like you cannot directly exchange with, like you cannot pay bills using crypto directly right now. But on crypto app, we have something called as crypto pay, through which you can do so to some extent. I will surely tell about that feature too. Then lack of awareness among people, because people are not aware about how this Bitcoin is actually working. They don't know. They're just putting money there without even knowing how it is actually working. And there are some lot of advantages of crypto as well. Like it is very difficult for someone to make any changes to that transaction ledger, and it is decentralized, so people have more power. Low transaction fee, like if you want to transfer money from one country to another, bank usually charge a lot of money, right? And maybe the transaction will be done only in bank hours. But here it is available 24/7. This crypto network is available 24/7. You can buy and sell crypto anytime you want. And it also enables instant payment. Bank will take around 5 to 7 days for the transfer, but here you can transfer in just few clicks to anywhere in the world. So that are some advantages of crypto. Now we are going to move to the second phase, that is about trading and investing. So if you have some doubts regarding till now, you can just fill this chat box here. Also, I want to know from you guys, from you everyone, like you are interested in investing or trading. I'm making one new poll here.
I think most people here are like invested a lot in both things, but more about the trading and the investing part of it.
Okay. All right. Cool. So most of the guys are like pro traders. So just want to know like what type of trader you are. I have made a new poll. Can you just give your responses there? And who have waited till now, I will be telling you one amazing trick through which you can earn some money using our crypto platform. So that is going to be coming now. So that's going to be very interesting. But before that, let's understand how to understand this graph, okay? And then we will be able to understand, then we'll be able to trade, right? So let's first understand the basics of trading. So basically, this is a candlestick. Suppose, let's say it's a 5-minute candlestick, okay? This candlestick is up for 5 minutes. So in this 5 minutes, this was the maximum price reached. So basically, in starting, the price of that coin was this thing, okay? We started from here, not this, sorry, here, okay? We started from here. Now in this 5-minute period, the price gone till here in between and also went till here. So this was the lowest point of the price in between those 5 minutes, and this was the highest price that was achieved in those 5 minutes. But after 5 minutes, the actual value of that coin was this. Okay? So this was basically a positive candlestick. Now let's understand what is a negative candlestick. So initially, the price of that crypto coin was this, and in those 5 minute period, the price went till here also, and high was received and high was reached till here also. But after 5 minutes, the price was this. Okay, so this is a basic understanding of a candlestick. Now moving further, now let's understand how to understand that the graph is going upwards or downwards. So we will try to figure out or analyze what is uptrend and what is downtrend. Okay, so basically let's start from here. Okay, we are starting from here. We have started looking the graph from here, this point. So it's a low. So basically this is a higher high. Okay, this is a higher high, and after this we got one fall back here that is called as higher low. Why higher low? Because it is still higher than this low. Okay, that's why it's a higher low. Then again it's a higher high, then it's a higher low, then again higher high, and higher low. So it's a kind of, so because we are again and again getting high high and higher lows, this is kind of a uptrend. Okay, because value is increasing. So how can you identify that now this uptrend is not following the path? So for identifying that, what we will have to do is basically this is the thing which is basically enabling the uptrend, right? This is called as pullback, which is causing the uptrend to fall, right? This is called as pullback. And basically this is called as, one second, this is called as impulse. Okay, which is favoring the uptrend is called as impulse move, and this is called as pullback. This is impulsive move, this is pullback. This is basically impulsive move, this is pullback. So basically you have to compare the higher low of previous pullback. See, this higher low is still above than this higher low of previous pullback, right? So our uptrend is not broke, okay, here, because higher low is still higher than the previous higher low of the pullback. And see, the next higher low is still higher than the previous higher low of previous pullback. So that's why it is called as an uptrend here. Now, if I talk about downtrend, then you can see here, we started from here, and now it's a lower high, it's a lower low, lower high, because it's still lower than this value, right? We started from here, so it's still lower than this value. That's why it's a lower high, then lower low, lower high, then lower low. So basically, since this is favoring this, right? It's favoring the downtrend. This is called as impulse, and this is not favoring downtrend, then it is called as pullback. So now basically you have to compare the lower high of two pullbacks. See, this lower high is still lower than the lower high of previous pullback, so it's still in a downtrend. Once it is broken, then our downtrend is broken. Then it is basically shifting to uptrend. So this is how we basically analyze the graphs to understand that it's a downtrend or uptrend. Now I would like you to, now I will basically open the app. You can also open the app here. So we will try to basically apply one technique through which you can earn some money, okay? But it is totally recommended for traders, not investors, because investors basically want to hold money for longer duration of time. Because I, as a person, I normally follow the strategy of investing. I'm not a trader, I'm an investor basically, because I do not have enough time to see the graphs daily and analyzing the graphs. I basically invest in coins and then I forgot about it. I follow the hodl strategy to hold it for dear life, because I believe in the technology of cryptocurrency that it will surely succeed in future and it will give me high returns in future, right? So basically I follow that investing strategy. But for traders, what is happening here is, suppose let's say I opened a bad coin here, and And first of all, you will see this interface of Let's Crypto here. You can see all the coins here. Now what I will do is I will go to exchange. I can select the coin. Now I'm selecting BAT. Now in this graph, I can reduce this thing and this period also. Also, I can choose the candlestick graph of different variations like 3-minute chart or a 5-minute chart or anything. Or I can choose a 1-hour graph, right? So this is the graph that I'm looking right now. So let's say I use an indicator here that is called as RSI. Its full form is basically relative strength index. Okay. What it does is it basically measures basically RSI. It's a momentum oscillator that measures the speed and changes of price movements. Okay. And RSI value basically ranges between 0 to 100. So if I choose this RSI index here, then you can see one new graph here, right? So currently it's near 60. Okay. So if it's 50 or 60, right, it's a right time to sell your coin. But if it's near 20, right, if it's near 20, then it's the right time to buy, because here people usually buy the coin and here people usually sell the coin. Okay. So now since it's near 60, you will experience a downtrend over here. You can see some red candlesticks here, right? So that's why it's happening, because it's around 50, 60 here. So at this point of time, you will see the red candlesticks here. But if it's near 20, you will see some uptrend for short duration. Okay. But I am not recommending you to just invest according to this. You will have to look on some other indicators also and some trends also if you want to follow. But most of the times it is right only, like at around 50, 60 value, we will face a downtrend, and around 20, right, we will face a uptrend. So what you can do is you can invest your money at the point at which it is around 20 and then sell it at this point. So this was one tip from my side. Now to avail free Bitcoins, right, what you can do is you can use this referral card. Like once you complete the KYC on our platform, right, you can go to the referral section and you can get this reward. Okay, you can avail free Bitcoins like Ethereum, Bitcoin by going to our platform after doing the KYC, and you can use this referral code here that is mentioned here. Also, if you want to connect with me on any social platform, you can scan this code or you can go to this website of mine. I have provided all the links over there.
Also, Priyanshu, could you just type in the referral code and your connect with me code in the chat box so that people can directly use it?
Yeah. All right. Sure. I will do that. Lucky, can you share the link for installing the app and how they can use this referral code?
Sure, I'll do that.
Yeah. All right. And that's it from my side, guys. Like if you have any doubts or any queries, you are free to ask now. It's a kind of a Q&A section now. So if you have any doubts or anything, you can ask me right now. That's it.
So I have a question from my side. So if I want to get started on investing in crypto, which cryptocurrency should I start with? Bitcoin, Ethereum, Dogecoin.
Yeah.
And when is the right time? Do you think it is, because last I saw, I think the markets are slightly down right now, in terms of stocks and also cryptocurrency. So when do you think is the best time for me to invest, and in which crypto?
It's a very nice question. So people basically follow different kinds of strategies. What I do basically is every month on a fixed date, I invest some money to cryptos, no matter it's the price is high or low, because I believe in crypto technology, blockchain technology, that it is going to succeed in future. So in a big gap, right? If I talk about future, like in a big duration, it will give me some good returns. So that is my strategy. But people usually buy the dip and sell it high. So you can follow that strategy also. So for investing in crypto, first you will have to use some crypto exchange platform. I will recommend you to use crypto itself because it's an amazing platform where you can exchange, and also we have that crypto pay also. If you open the app, we have the feature called as crypto pay, through which you can pay to any UPI ID using our crypto platform. So basically, you will pay in Bitcoin or Ethereum or any coin available on our platform, but that person will receive amounts in INR through UPI. So that is some unique feature on our platform, and we are working on some other amazing features that are coming soon. So yeah, that is from my side. So this is the investing strategy that you can follow. Like you can buy the dip, and currently since markets are down, right, you can buy the dip. It's the right time to buy. I have also bought it recently. So you can buy it at this time and sell it when it's the price is high.
So which cryptocurrency do you think I should invest in?
Yeah, surely. So basically, what I will recommend you is first going through their white paper, like what operations they are performing behind the scenes, what they are focusing on. You can see, analyze those coins by yourself. Like if you believe in that coin, only then invest, not just randomly choosing any coin and investing in that, just following the graph. If you want to invest, not trade, right? Because I believe in Bitcoin, Ethereum right now because there are some stable coins that we can trust right now because they have huge market capital. So I invest basically in Bitcoin and Ethereum, and I will recommend you to start with, right? You can start with Bitcoin and Ethereum. I basically follow a portfolio of 60% Bitcoin and 40% Ethereum. In this way, you can also start with your crypto journey. Amrit.
Okay, thanks for letting me know. This definitely helps.
Yeah, Amrit.
Can I suggest something?
Sure. Go on.
I've heard that Shibu in a coin is going to upwards, like it will go up like in some time. So I would recommend that as well.
Yeah, definitely. I have invested in Shiba Inu coin also, like some amount I have put there because of that trend only. But it's a meme coin. I don't trust it fully. It's a highly volatile asset. So I will recommend you to just go through those white paper ones of it. And basically, it is hyped right now. And also because of those Elon Musk tweets, right? It is getting some attention. So it's all about news because news also interfere the prices of these crypto coins because no one is aware about these cryptocurrencies, how they're working. They just blindly believe those big people because they have huge funds in them. That's why they try to populate it and earn high profit from them.
Yes, exactly, sir.
Yeah.
And what about Solana, Priyanshu?
Solana basically trying to reduce the gas fee that we have to pay. Like if you make any transaction in Ethereum, right, you have to pay a huge gas fee. So Solana is working on that. So I think that is also a good coin you can invest on. The third, if I have to choose third coin, right, in my investment list, then it is going to be Solana itself. So first Bitcoin, Ethereum, and then Solana.
So basically, Priyanshu, what are your thoughts on those metaverse-based coins as well as those mana, sand, and all those stuff?
Yeah, right. So basically, this metaverse is kind of a new thing. So people are not much aware about that. So metaverse is focusing on creating a 3D ecosystem where people can meet people virtually and interact with them virtually. And basically, Mana, right? Mana has platform called as Decentraland. Basically, it's a kind of a 3D virtual space where you can make an account, attach your MetaMask wallet, through which all the transactions will be done. And suppose if you explore that 3D virtual space, right, where you can interact with people, and there are some NFTs, right there. There are NFTs that you can purchase through Mana Coin. So, see, truly speaking from my point of view, I don't believe fully in that right now, but I'm exploring this metaverse and Web 3.0 things that are new, and I will surely come up with the conclusions in the upcoming days.
So we have one question in the chat. Yeah, go ahead.
Volatility of any crypto with fixed deposits. Sandbox is also a kind of crypto coin that is focusing on this metaverse and NFTs like Mana. Can you tell me what factors that affect the rate of cryptocurrency? Yeah, basically it depends on demand and supply, and then regulations from government. Like suppose if Indian government has banned that crypto coins, then it would have gone to sudden downtrend in the market. And so news is there, regulations are there, then some tweets from big giants, big whales, and also demand and supply. So these are some things that we can consider this. And also the technology lying behind the coin. Okay, how are they processing the fees? What is the gas fee and all that stuff? The technology and architecture they have used, that also determine the cost of the coin. Like if they are following, if their motive is some good, right? They have to solve some use cases in society. I think that is going to be the factor that is determining the cost of cryptocurrency a lot. So that's why I suggest everyone to, if you want to invest in any coin, right, just go through their white paper, what their motive is, what their capital is, and what they are focusing on, and then only invest in any coin. But if you want to start your crypto journey, right, if you want to be in safe side, then invest in Ethereum and Bitcoin. And it's and currently the markets are really down. It's the right time, I think, to start your journey. You can start investing like around, like every month you can invest some small amount in starting, and then you can start exploring new coins in future. Also, I invest in stocks also. So basically, I try to diversify my portfolio, like in stocks, fixed deposits, debt funds, and crypto.
Amrit, I guess we can wind up the session now.
Yeah, we can wind up the session. And also all of those who are in the cryptocurrency groups that we have added, we have put the referral codes and everything there. So you can use it there and also share with your friends who are interested in starting their crypto journey. Thanks for joining in, guys. You can leave now.
Thank you guys for joining. See you.